Manish Sonthalia is with us now, Chief Investment Officer at Emkay Investment Managers. Manish, good to have you with us here. Thank you very much for your time. You know, let's just sort of dive straight into the capital market plays, which has been such a darling for the street for obvious reasons. Do you think that trajectory, especially not for all, but for some, not obviously for the wealth guys, etc., but for some gets dented because of the regulatory actions we've seen? It of course started with on the F&O side, but now we're seeing it on the Jain side, etc. as well, and I think needed. But there are secondary implications as well. What's your sense?
So Prashant, I think it's just a blip. Capital market plays a strong place going into the medium and long term. Of course, there's a knee-jerk reaction on the downside. Exchange volumes are going to fall 4-5%, to say the least. But I think newer players are also going to enter the F&O space now that this one entity, would be out, and there'll be normalcy in terms of the trade patterns, etc., on the exchanges. And given the fact that March onwards, you have seen a very strong capital market rebound, which is going to have a rub-off impact on your earnings for the first quarter as well. All capital market entities are going to report better than estimated numbers. That was the case in the fourth quarter when the markets were really down. So all in all, I think the capital market plays are a very good buy on dip, and obviously the RTAs, the online brokers, the depositories, they would all be fantastic plays. The wealth management guys, yeah.
Okay. Manish, hi. Thank you so much for joining in. I want to straight away get to you on this whole consumer debate, right? Because we were just saying this, and this has been building for a while. The market's big hope on the return of the great FMCG juggernaut. I mean, if not FMCG in some format, I'm saying, bottom or middle of the pyramid consumption, because till now consumption is only top of the pyramid. Expensive watches, jewelry, top dollar apartments, etc. Do you actually see the bottom of the pyramid consumption coming back? And if you do, then what sort of stocks would you be looking at?
So, Surabhi, I've been maintaining for a while that consumption is going to make a comeback. The pendulum is going to shift away from investment-related themes to consumption-related themes, thanks to the government's impetus on providing income in the hands of the middle class. That was not the case over the last 2 years, where they have been beaten down heavily by inflation as well as very high taxes. Come this financial year, obviously you have 1 lakh crore savings in income tax, which will create a multiplier on the consumption side, more on the discretionary consumption side, and also on the rural consumption side, that we are seeing that, rural economy has turned a corner and monsoons are pretty decent. So even that is going to have a positive rub-off impact. And obviously the consumer names, you can deal with anything. Of course, one needs to figure out where the consumer would primarily have preference first. So it could be your, travel, it could be your hotels, QSRs, you could be dealing with automobiles, personal vehicles, health insurance. These are some of the consumer discretionary gains which are definitely going to benefit. Of course, you have another added impetus coming from 1st April 26, which is the FA Commission. So all in all, the consumption names have not done well over the last 2 years. Now it's the time to actually, for them to actually have an outperformance going forward.
Hi Manish, good morning. Good to see you, Ben. You don't shy away from stocks as well at times, and on a periodic basis, every conversation you've given us one. Star Health, I recall, it was the one that people were not looking at. You said, post the correction, valuations and the business itself seems to be looking up. And that's been actually a contra call that's worked very, very well, if someone heard you. But the question is, today, what are you going to be telling us? Which is that stock that you're actually looking at, which could have underperformed, has valuations in favor, and prospects look up from here on? Please go ahead, Manish.
So Nigel, ever since RBI has given a front-loaded rate cut, pretty heavy dose of liquidity, I think some of the, the capital market players, and we alluded to the names, the all well-known names, these would do well. You will have the real estate. So the whole thesis is that markets are going to overshoot fundamentals. And obviously, we are closer to now all-time highs, and they'll be overdoing things. So asset price inflation is basically the major theme going forward. Plus combine that with consumption, which is basically having a fundamental thing. So all the real estate names, the NBFCs, you have many of the NBFCs, the housing finance companies, not the PSU ones, but the private sector ones, which are projecting 20% sort of a growth available at, let's say, 1.5 times PEG, so on and so forth. Or you'll have, let's say, the public sector banks per se, which are available at very decent valuations. You'll have the infrastructure names, which gets boosted due to lower cost of capital as well as benign commodity costs. So these are some of the areas where I think the new underlying bullishness would come through just because of the RBI's action very recently.
In each of these themes, you want to give us one particular name?
That's typical, Nigel. You know the regulatory constraints.
Manish, just to go back to that point on consumer, since you're convinced that there is indeed going to be a pickup again, but what would be the best ways of playing it? Would it be plain vanilla FMCG? Should it be, two-wheeler companies? What else are you looking at? Could it be QSRs, for instance?
Hotels, consumer tech, look at QSRs, you look at fast fashion, retailing, whether food retailing, whether apparel retailing. These are some of the names where you have fantastic names available. Jewelry retailing, to say the least. Ethnic wear retailing. These are some of the names which will benefit. And as far as FMCG side is concerned, let me give you some insights. One insight, basically, which I have gathered over the recent interaction, is that, D2C is hitting the incumbent FMCG companies in the urban markets. And, there is heightened competition in the urban, because FMCG broadly are areas where things are very, very penetrated. You have the soaps, the toothpaste, etc. So how do you beat the D2C, which is really competing in the urban space? So FMCG, those players which are actually focused on the rural space would tend to benefit more. Because there you have lesser competition from D2C per se. And, if the rural economy is turning, then FMCG players focused more on rural areas are likely to benefit.
Yeah, no, okay. FMCG players focused on rural areas where there is lesser competition from some of the D2C players is what you're focused on. Actually, my question was consumer. Anything else consumer apart from FMCG? If there is this consumer pickup, which has been long awaited, but which is not really materialized, anything else? Any other segments you're focused on?
Hotels. Hotels are going to benefit magnificently. Anything to do with travel, and hotels basically are the business of managing sleep. A guy has to sleep at night, and look at the number of passengers traveling every day. 5 to 6 lakh passengers traveling by air. You have 1 crore passengers traveling by train, and you have 1 million passengers traveling by road. Now, assuming half of them actually stay with the relatives, the balance half have to sleep at night. And this would include all the unorganized guys, the OYOs of the world, the Airbnbs of the world. Plus, you have just the number of organized hotel rooms in the country, anywhere between 3.5 lakh rooms. And supply of hotel rooms can't exceed more than 5 to 7% every year. Just you see the demand and supply gap that is existing as the economy grows between 6.5%. We are not only talking about leisure travel, we are talking business travel. And look at the occupancy rates, 70% plus. Tariffs are on the up move. And, you have the ARRs, which are...
Yeah.
No, and you just got to...
No, but Manish, the story, I mean, no one can debate the story and the potential, because I think it's a reversible change. When we talk about where we want to spend the money, I think taking a holiday or a short trip is the first thing that comes to people's mind. The question is on valuations. Where do you see valuations? Are they comfortable, not? Indigo's, for instance, at all-time highs.
No, so Surabhi, you got to actually figure out the certainty of the earnings coming through. And in the case of hotels, of course, you could debate that last 2 years rate of growth might not come through in the current year. But can you see the next 5 years of growth come through for the hotel space? It is a given that given the demand and the supply mismatch, I don't really think valuations are going to come off very, very easily. So you'll have to basically have a waiting game as far as you're making money from the current price levels. But there is higher degree of certainty that valuations won't correct massively. So you'll have, let's say, the leader in the pack, then you have to figure out the discount vis-a-vis the leader. But it all boils down to growth, the margins, and I think margins certainty looks pretty okay in the current scheme of things. So yeah, the valuations are not very cheap. So is the case with, let's say, hospitals. The demand and supply gap is just too big. Are you seeing any comfort in terms of near-term valuations for hospitals? No. But are you seeing growth come through for the next 3-4 years? The
Yeah.
answer is a yes. We'll have to wait.
Hotels and hospitals, huh, Manish?
Yeah,
Or both,
absolutely.
or hospitals like hotels?
Yeah,
I'm just joking.
both of them are
joking.
business,
But
setting out your real estate.
no, real estate. And you got to sleep, as you said. Interesting conversation. Thank you very much. And we'll sort of pick up on some of these points as we go along in the future as well.